Hi everyone, this is Kathy Lee with BK Forex. Happy Monday. Last week we had a very strong US dollar rally, and now everyone's wondering, will those gains last? The equity market also traded sharply higher, especially on Friday, where we saw a 700-point move in the Dow, and gold pulled back. Now, the reason why we've seen all of those moves is because the White House as well as Senate reached a deal to raise the debt ceiling, so that the major certainty has now receded. Also, we had a very strong non-farm payrolls report. The labor market has long been the primary area of optimism for the Fed, and the fact that we had a very good jobs number kind of reinforces the underlying health of the U.S. economy. But what's interesting, and perhaps what can tell us whether or not the dollar sustains its gains, is that Fed fund futures have not changed that much. Prior to the data, the market was pricing in about 70% chance of a rate hike, of no rate hike in June. And now the odds are pretty much the same, 70% chance of no rate hike. So why has that happened? I think, first of all, the language that we've heard from Fed leadership has, basically indicated that they want to see more economic reports. They want to see more data, and they're leaning towards skipping a June hike. And then also the household survey, which is what the unemployment rate is based on, deteriorated and actually reported job losses instead of job gains. So everyone's kind of confused as to, which one they should rely on. I think at the end of the day, all of this kind of reinforces the need for the Fed to wait some more. The need for the Fed to see how the incoming economic reports fare, see how the inflation reports fare, see how the next NFP report fares before raising interest rates again. So the fact that Fed fund futures have not changed that much is why the US dollar, which may be able to push a little bit higher, may start to give back some of its gains this week, especially since we don't have much in the way of data aside from the ISM services report, which, should be a little healthier. We do have two rate decisions, the Reserve Bank of Australia and the Bank of Canada. Both central banks are expected to hold rates steady, but both are expected to also maintain a hawkish bias. For Australia, consumer inflation expectations have been hot, and in general, the RBA thinks that more rate hikes may be necessary, and the market's fully pricing in a 25 basis point hike in August, even though the current forecast is for a pause in June. For the Bank of Canada, the case is even stronger. Data has been very, very good. From the labor market report to the inflation report to oil prices rebounding, the case is there for actually a rate hike in June if they wanted. But I think, they're probably going to pause and signal they're also watching incoming reports before making a decision. But there's a greater chance of a hike from the Bank of Canada, I think, than the Reserve Bank of Australia. Aside from the RBA, there's a lot of other data like trade data, first quarter GDP numbers, Chinese PMIs, Chinese inflation data, Chinese trade data that could affect how the Australian and New Zealand dollars trade. As for Euro, we've got a couple pieces of data, mostly tier 2 economic reports. We do have revisions to PMIs, but we also have Eurozone retail sales, Eurozone industrial production, nothing that's significantly market moving, but the ECB has been clear they plan to continue to raise interest rates, in contrast to the Fed, who's talking about skipping the next rate hike. There's not much going on for the UK or New Zealand, so I think, keep an eye on how stocks are trading. I think, the lack of major US economic releases could mean a bit of an exhaustion in the US dollar rally, but in no way, shape, or form do I think that we're completely done here. I just think the dollar rally is getting tired, and I think that the Fed hike later in the year is still very much a close call, even though, and in some ways, the June hike could still be a close call if data continues to surprise the upside. So bottom line, I think we may have an exhaustive move in the dollar this week due to the lack of data, but not a huge pullback in the cards. Have a good week.